Hey guys, John Paulamy here, Actionable Intelligence. I haven't been doing interviews lately, but my friend Justin Huhn reached out to me recently. We haven't talked in about a year about uranium, so I said, you know what? I had been on hiatus on the interviews, but I said it's probably a good idea to get Justin on and talk about a lot. There's been a lot of news and a lot of things going on, and because of the fact that I'm a generalist, it's good to have Justin on and have him talk about the more in depth. So, welcome aboard, Justin. Appreciate you coming on.
Thanks so much, John. Yeah, I didn't realize that it had actually been that long since we had talked. So I'm happy to be back. There's a lot has happened in the last 12 months. I know you're aware of most of it, but gosh, it's been a wild ride. It's been a wild ride.
Yeah, and that's kind of well, definitely have a ton to talk about. I guess to get started is, what's your just like 30,000 foot level view of things right now? And then I think that that'll segue us into talking about more specific things. What's going on in the uranium market right now?
Honestly, the 30,000 foot view that is coming to me at the moment is this market. It actually feels, and I'm talking specifically about the physical market. So the physical market for uranium, and to some extent, in a related and unrelated way, the rest of the fuel cycles, conversion and enrichment markets, but really talking about uranium here, it feels like a pressure cooker. We have come to a situation now where we have a glut of demand coming forward for the next, let's say, 3 to 5 years and beyond, of course. But there's still a pretty large amount of uncovered requirements for utilities globally, and especially certain utilities in the United States for the next few years. And we have a sort of significant shortfall in supply. And you can take just an annual snapshot of supply versus demand and see a supply shortfall of 30 or 40 million pounds for this year alone. But that doesn't really tell the whole story, because the whole story involves who is actually producing right now, who will be producing in the next 3 to 5 years, and how much of that capacity is already sold. So if you actually look at the existing producers, so that's Cameco, Orano, Kazatomprom, Uranium One. There's a handful of traders with offtakes from producers in Uzbekistan. The Chinese are entering in a decent amount of contracts, not a lot on the selling side, but production out of Namibia from Husab and Rossing, and then you have BHP essentially. Those are the existing producers. Paladin is getting there. Linger Heinrich is being restarted now. They'll have some production next year. I think full production 2025. That's what they're shooting for. So all of these players, and looking at their actual capacity going out for the next 3 to 5 years, how much of that is sold, and I can tell you that it's almost all sold. We're talking about mostly sold out, especially for the next 3 years. Then we go out to 2027, 2028. A little bit of capacity starts to open up 2027, a little bit more in 2028. Out to the 2030s, the picture is decent at this certain point in time, but it's actually quickly being consumed. So we know for a fact that the reactor demand and the uncovered demand for nuclear utilities that are existing operations, so we're not talking about new builds, we're not talking about new reactor starts from that are currently under construction, just the existing fleet right now, the operations and the utilities uncovered needs for this period of time going out, let's say the next 3 to 5 years, and compare that against what's available. And there's far less available than what is set to be purchased. There's a lot of variables within that rough calculation, or secondary demand. So producers buying, financial entities buying. Then we look at inventory restocking. Will these nuclear utilities actually be buying more than they need to restock inventories? And inventories are not at dire levels, and they never really are. So I don't really like this utility panic narrative. It has never really been a part of my thesis for this sector. But I do, we were chatting before you hit record, and I agree with something that you said. Is I do think we're going to have a musical chairs moment. I don't think it's in the next 12 months, maybe in the next 24, but I would strongly argue that I believe in the next 3 to 5 years, we're going to have a moment where there's going to be utilities basically bidding over the same limited number of pounds available. And the early stages of that are starting. We have a very, very thin spot market. The midterm is almost as thin as the, within 12 months settlement spot market. And it's just an extraordinarily undersupplied market. And there's no real relief valve coming. And the one relief valve that everybody's counting on, I'm making a strong bet that they're not going to come close to hitting their projections. We're talking about Kazakhstan and Kazatomprom specifically. So we can get more into that if you want, but that's my 30,000-foot view. We've got this, I've been calling it the supply black hole. We've got a 3 to 5 year period going forward before big new mines are online. So we're talking about next gen's Arrow, and that's not 3 years away. That's 5 years away if we're lucky. Next gen's Arrow, Denison's Phoenix, Global Atomics Dasa. Uzbeks are going to be increasing production a little bit each year. Kazakhs are going, I think they'll succeed in some increase in production, but I don't think they're going to come close to their targets, not even within a long shot. Besides that, there's just small stuff in the US, small stuff in Australia. There's just not sufficient supply to balance this market out, probably for 5+ years. And in that period of time, I think all bets are off. I don't know where the price is going to end up. It's going to end up, in my opinion, far higher than that quote unquote incentive price. But I don't think it's, it's hard to say where it will end. I have no idea how high this could go.
Interesting. Yeah, and that's, one of the things that we talked about before we got on is, you hear people make all kinds of wild predictions. It's almost like unknown. I mean, if you had a situation where you had, well, I don't know what the percentage of undersupply is, what you said, I don't know, 40 million pounds, like 25% or something, or whatever the annual demand is, something like that. If you had that kind of supply demand deficiency in any other commodity, or like oil, for example, that's all we would be talking about all day long on the national news, because the oil price would go to a price to ration the demand and stuff like that. But the industry is so opaque. I've heard little rumors. I follow different people on Twitter or listen. Like I said, I'm a generalist, so I'm not into it every day. But I've heard like even rumors like people being utilities or people that want pounds have went and put RFPs out, and no one responds to the RFP for 100,000, 200,000 pounds of uranium, like you said, in a market of 150 or 160 million pounds a year, and nobody's even responding to these requests for proposals. So I know a lot of people like to focus on the spot price. I guess my question to you would be like, what's going on with the actual term price? Because that's where the utilities are really, that's where they do most of their business, I guess. They're going to try to lock this stuff up in advance. And so what's the transparent, why don't we, maybe not transparency, but what kind of vision do we have into what's happening there in the pricing vis-a-vis the spot price, which everybody tends to focus on?
Sure. Well, the term market and the spot market are pretty connected. The spot market is just so much more visible because that price is published every single day, and in some cases intraday by Numerico, and UXC publishes it on a daily basis, and it's much more visible for the investing world. And there's transactions that happen on an almost daily basis, and most of those transactions are pounds being traded back and forth, not necessarily pounds being purchased by end users, which would be utilities essentially. But the term market, the published long-term price is basically the low offer of that month, but it's kind of confusing because really the price is so much lower than the existing where the existing contracts are going off at, and of course the spot price. So you would think we'd have a severely backwardated market by seeing a printed term price of $66 and a spot price of $81.50 or $82 a pound that was just printed today. But that's not really, in fact, the case. There's not a whole lot of backwardation-based arbitrage that's happening in the market currently. Some of that has to do with high interest rates, but it's very difficult if you were to try to go and cover off, like sell pounds into spot and try to cover that off in a midterm contract and try to get $66 pounds, you'd have a hard time doing it. So that really is sort of like the floor in these market reference contracts that have floors and ceilings. This is somewhere in that ballpark in the 60s. We're hearing the ceilings in some of these contracts. Of course, it depends on the quantity and the time frame for delivery, but they're getting into the 90s and even possibly into triple digits in the ceilings. And the ceilings really are just telling you where the market's going to go, because that actually is protecting on the upside the buyer. So it's almost like the buyer and seller are both saying, hey, there's a risk that this is going to go far beyond this ceiling price. So let's set a ceiling to protect you, the buyer. That's what that ceiling is. So if we shoot up to 150, the buyer is limited to paying $100 a pound, right? And of course, the floor protects the producer just in case, things go completely backwards from where everybody thinks they're going to go. At least you have a floor price to protect your downside as well. So that's what we're seeing most contracts being done at right now. It's these term contracts, rather than being partially referenced to the market and partially fixed, which is what the buyers want. In fact, if the buyers had their way, it would be totally fixed, because then they can budget around that very, very easily. With these market reference contracts, with these wide berth between the floors and the ceilings, you don't really know what you're going to end up paying at that time of delivery. Harder to budget around. But of course, the market reference contracts are what the producers want. They want as much upside exposure as they can get, and pretty much the entire industry, buyers, sellers, producers, everybody and everybody in between, know that we're in a bull market for the commodity. There's no question about it at this point. And anybody who has been kind of sitting on the fence is sort of starting to come to the table now and say, okay, let's get this done. We need to buy uranium. So these contracts basically are looking like they're entirely market referenced, big, higher floors, higher ceilings. They continue to inch up, and they're also for longer periods of time. So in the previous decade, when you had a stagnating price or a dropping price, you don't really need to contract far out into the future. And for large quantities and for a lot of years out in the future for delivery. You basically are going to buy in the spot market. You'll do a shorter term, 2, 3, 4 year carry trade. But nobody in 2016 and 2017 was calling Cameco and saying, hey, let's pay up for 2025 to 2035. Like, that just didn't happen. Well, now that's happening. We're hearing that there are enrichment contracts getting done out into the 2040s already. And utilities are buying contracts and signing contracts that are delivering for, instead of that 3 to 5 or 6 year time frame, for more like 7 to 10 years. So there's a kind of a scramble to make sure that things are covered in this current supply situation. With all of that said, the spot market, like I mentioned, is what everybody watches because it's so much more visible. And those two markets are connected always. So it's not like they're truly independent markets. They aren't really. But the spot market is so thin that we've seen multiple dollar moves in the last month with very, very little pounds traded. We saw a $2 or $3 move on 0 pounds traded. We see bids coming into the market. As soon as the spot market sees that bid, they'll pull back the offer. Little things like that. It's very low volume trading. But the price continues to be constructive and moving to the upside. And now we're actually, on the day that we're recording this, Friday, the 8th, we've got bids moving up across the fuel cycle. And that seems to be, at least in some sense, in response to this House bill that's being voted on Monday, that is aiming to basically stop Russian uranium deliveries to the United States within 90 days of the bill being passed. And there are potential waivers, but it's a big question whether or not the Department of Energy is going to be generous with these waivers. So this sort of unknown with this bill, whether or not it's going to pass, whether or not these waivers will be generous, is heating up the market a little bit here with any utilities that are especially more reliant on future deliveries of Russian uranium.
Yeah, I was going to bring that up with you. I'm glad you brought that up. I'd like to come back to that. What I'd like to shift to is, if you don't mind, is the demand side. Now, I mostly follow the demand news. In my weekly news items, I bring up little things, but I thought something that happened basically in the last week or so, when they had the big climate conference in Dubai, COP28, there was an announcement made. They had a big thing that they built there, and basically had all the was basically a lot of the OECD countries, large countries in the world, 22, I think, or something like that, committed to doubling or tripling, I can't remember off the top of my head now, their nuclear plants, whatever, capacity between now and 2050. Now, obviously, this isn't actionable on Monday morning or even in the next year, but what I think is important, at least in my view, and I'd like to get your opinion on this, is, I think you and I have been talking about this off and on for 3 years, 4 years, maybe. Even before that, I've been a big advocate for nuclear power. I always had a sense that it was going to make a comeback, because being in the actual renewable business, I just couldn't get my hands wrapped around the capacity factors. I said, this just isn't going to work. This isn't going to scale to do what we need it to do. And so you're going to end up back at nuclear. And so I think I feel a little bit vindicated on that now. but what is your sense of it? Is it just a bunch of people talking? Is there an actual commitment? What's this going to do over the next 10 years if people are going to move to that? And inside the context of what was already a lot of basically wind in our sails on the demand side. Get your comments on that. I mean, I threw a lot at you, but I think it all ties
Yeah.
together.
Yeah, I mean, it's obviously a positive thing to see this type of pledge. And that's what it was. It was a joint pledge that I think 23, 24 countries ended up signing in the end, basically pledging to triple the global nuclear capacity by 2050, without necessarily, as of yet, any individual companies or countries' commitments on that front. So we've seen a few countries, and some of them also did sign this, where we've seen intentions to build out new nuclear. Sweden's just flipped and passed something recently where they will allow having more than 10 reactors in the country and building new reactors at new sites, because that was prior to this passing recently. That was illegal in the country. The UK is committing to building new nuclear. The United States is talking a big game, but as of now, there's no new nuclear builds planned. There was an article in Bloomberg a couple of weeks back about U.S. utilities, certain large U.S. utilities actually considering building new large nuclear, specifically talking about Westinghouse and another AP1000. So that's good to hear, because most of the utilities in the U.S. that were polled over the past year or so that say, by the way, the majority are interested in new nuclear, but they were all looking at small reactors, right? Small modular reactors that theoretically are cheaper, but has yet to be proven. Poland is really coming out swinging. They famously sort of have the most coal-reliant electrical grid, and the dirtiest grid in terms of pollutants, and in Europe. But they are making a big move towards nuclear. In fact, just in the past week, they had committed to building 24 GE Hitachi BWRX-300 small modular reactors at 6 separate sites. So 6 4-unit nuclear reactor power plants. So that's pretty big, but that's in addition to them also building some AP1000s. And they're moving quickly, Poland is, towards building new nuclear. So these sort of proclamations don't really move the needle for the commodity, at least not in the immediate term. But I think really what they do is they sort of give permission to the environmental left to embrace nuclear. And there's still, and that has been happening slowly over the past 2, 3, 4 years, because the folks that are most up in arms about climate change and carbon emissions should be in support of baseload, safe power that has 0 carbon emissions. That is a no-brainer. But for whatever reason, they couldn't put those 2 and 2 together for a couple of decades. So, well, that's finally starting to happen. And I think this big statement at COP28 and this entire conference is really about coming together to talk about climate change, really is what it's all about. So the fact that they had this multi-country pledge, I think, is a big vouch for nuclear, and it makes it okay for the rest of the environmental left to consider and embrace nuclear, in my personal opinion. Now, what does that mean for the uranium investment in the next 2, 3, 4, 5 years? I have no idea. Probably nothing. But if we start to actually see new construction starts in the United States, more in the UK, in Sweden and Poland and all of these other countries that are pledging new nuclear, if that actually starts to happen in the next 2, 3, 4 years, that sort of just underpins the entire thesis. And like I've mentioned in a couple of recent talks, where the basic thesis really is just looking at supply and demand, and like any commodity investment, for the most part, project out demand into the future, project out supply into the future, see and make some sort of bet on what you think that dynamic will have in terms of pressure on the price of the commodity, right? And that was the initial bet, and it still is, and that still is the core of the thesis. But we have this really cool story kind of underpinning that supply demand dynamic that makes an investment thesis really, really clear. But then we have this other thing, which is like, oh, this sector is actually growing. It's a growth sector, and we don't really need nuclear to triple by 2050 for this investment to work out in the next 3 to 5 years. We don't need it at all. We honestly don't even need the reactors under construction hitting the grid in the next 3 to 5 years. So growth in demand is not part of what is going to move the price in the next few years. It's just not. But it doesn't hurt the story.
So basically, we already had a pretty tasty cake. We've just potentially added more frosting layers on top that may be added as we eat this cake. Okay, that's kind of how I've been looking at this also. But I do feel pretty good about it just from a fact of finally, I don't want to use the word vindicated because I wasn't the only advocate, but I remember back in the early days of uranium Twitter or whatever you want to call it, Urana Twit or whatever, when there was only a few handful of us out there, that was one of the common refrains. This is crazy. This is an industry in decline. Why are you guys even talking about this? And like you just stated, I mean, I've always maintained that, there was a flipping point where it flipped where became a growth industry and people just weren't paying attention. They were operating with information that wasn't correct. I mean, going back to even taking that recent proclamations out of the equation. I mean, even places that I was relying on for really going full bore on nuclear or nuclear power, China, for example, I think has increased its commitments. India has come out with some announcements. This is where I really always thought that the growth would be in the global East and South, just because they didn't really have any options. And they were looking at it more from an energy security and more of a generation mix, not just trying to rely on one generation, or in the case of India, choking out the population with just running straight coals. So yeah, I feel pretty good about this going forward. Let's flip back to demand again. Back to we talked about like you mentioned like Kazatomprom, for example. That's one of the things I've been fascinated about, and I've tried to remind a lot of my listeners is this isn't just like okay, well, this management team came out and said they made an announcement they're going to bring something back online, or this management team at this company said they're going to bring. So it's just amazing, like what's happened over the last year. I don't think people have a full understanding or grasp, especially if they haven't worked in any kind of like heavy industry, how difficult, first of all, mining is to do. Uh, Notwithstanding the permitting issues, the governments, all that stuff. I mean, we already know what's happened in Niger with the coup, how many pounds that's dragged off, what that's done to the potential for DASA, which is a pretty good project, for example. That's kind of like in not limbo, but kind of nobody knows what's going to happen. You hear these things like, Kazatomprom. They've for years now, I think it's been at least a few years, have this problem with the sulfuric acid they need supply for their ISL operations. Just seems to be, and so it's like you can't just make these assumptions that when a management team says, okay, this is what we're trying to do, we're going to do like Paladin turning Langer Heinrich back on. Okay, well, this is equipment that sat around outside, on care and maintenance, maybe in Africa, so in Namibia. Is it, what's it really take to get this up and running again? And I think people, how much do you take that into consideration? Because we're kind of moving now into the investment implications, but like, I really think that, they're starting to get it down like in India and China. I mean, being able to get these things built fairly on time and on budget. But the mines, I mean, it's just a disaster trying to get these. And it's not necessarily in my mind, because people don't know what they're doing. It's just mining's a really hard business, and you have a lot of unknowns. I was like, one of my friends says, everybody involved in the project's trying to wreck the project. He doesn't, that's not exactly true, but that's just what ends up happening, So, and I know that from my own experience building, renewable projects. I mean, if it's not the permitting, if it's not the supplier, it's always something that's coming up causing delays or causing problems. So that's a little bit long-winded, but how does that come into consideration? Because it just seems like all the news flow is like, okay, yeah, people are like struggling to get these things up and running, or there's always a problem.
There's always a problem. Mining projects never come online on time and on budget. It just doesn't happen pretty much ever. And there's uranium mines are no exception. In some cases, are even worse than other metals and other types of mining projects. Yeah, I think I mean, just looking, you mentioned Paladin's Langer Heinrich. That appears to be moving forward in its restart at a decent pace, but it is taking longer than they originally projected. And their restart capex, I don't know if you remember this, but it was, I think, autumn of 2021. They had a restart capex of, I think it was 84 million. And then they came back 5 months later and had to revise that up to 120 million. And that was like a 35, 40% increase in capex. simply from inflationary pressures over the course of less than a year. And that's not unique to that project. Projects around the world. I mean, we have a lot of these large, lower grade deposits in Namibia, that projects that have done feasibility studies 2 or 3 years ago, those need to basically just be wiped clean and redone. Not only just because of inflation, but all other sorts of various factors that have influenced this. And there's a major skilled labor shortage pretty much everywhere. There's a shortage of plumbers, there's a shortage of electricians, and there's a shortage of people that can drill wells and drill out these deposits. There's a shortage of nuclear engineers. I mean, there's a shortage across the board of skilled labor. It's a major problem in multiple industries. Again, no exception for the uranium industry. So yeah, it kind of comes back to just taking a realistic picture of supply and really being, when you model these things out, you usually do it in a conservative manner, so that if Arrow is producing in 2028, you want to model that out because that's what they're telling us is going to happen. Of course, the largest uranium mine to ever exist, is that going to get built in the next 4 years? I don't know. Maybe not. Certainly, even the nuclear fuel analysts like UXC and Trade Tech, they tend to be much more skeptical about timeframes for supply, and they're actually writing and telling their customers, which are nuclear utilities and fuel buyers, and don't expect a supply solution to come into the market anytime soon. We're years away from this situation being fixed, and this is the words coming from those folks, not from me. So it's a problem. Looking at Kazakhstan, yes, sulfuric acid has been a little bit of an issue. Obviously, they still have access to a decent amount to be producing what they are, which is an enormous amount of uranium, right? They were supposed to produce 23,500 tons this year. I think they're going to miss that by about 1,000 tons, which is about 2.5-3 million pounds off of their target on a 100% basis. They're flagging next year's production, or they're projecting it to be 10% below their subsoil use contract. So somewhere in the ballpark of 25,500 tons. So they're trying to produce an additional 8 to 10 million pounds next year. And what we're seeing so far as evidence of their spend is that it's insufficient to maybe even maintain production levels from this year based on their CapEx spend. Now, it's possible that they're not spending as much because they know that they will have insufficient sulfuric acid. That is a possibility. I don't really know that. That's a speculation. But their realized price and their profits had actually already declined, even though they had produced a bit more in their most recent financials. So in Kazakhstan, the way that it works, because it's an ISR operation and they have these very large deposits, they have to essentially inject the lixiviant, the sulfuric acid, into a series of wells into the ore body. And it has to sort of impregnate that ore body with sulfuric acid, bind with the uranium, and then it extracted through another set of wells. And it takes time for that ore body to be fully impregnated with this solution. So from the point of drilling the series of wells for a well field in Kazakhstan to the point where first production comes out of that deposit is like 6, 7, 8 months. And then full production from that deposit is between 12 and 18 months from that well field, I should say. And from that peak, it just only declines. And so they have to constantly be drilling. And they don't do a lot of drilling December, January, February because it's so damn cold. So they have to go all out. And you can watch the CapEx in Q2 and Q3 of every single year. And you can basically get a decent idea about what will be produced the following year. And what we've seen so far is not only are they not increasing CapEx sufficient for a 10% jump in production next year, but I think they're going to have a hard time actually meeting their existing production levels from this year. And I think they're going to have to come in and tell the market this in January or early February of next year. So we believe they're going to miss. And then going forward, they already have production guidance for 2025, but they're saying they want to hit 100% of their subsoil use agreements, which is 30,500 to 31,500 tons of uranium production. So if you multiply it, so a ton of uranium is 2,600 pounds roughly. So 31,500 tons is like 80 million pounds. That's about a 33% jump from their production of last year. I just don't see how it's physically possible. I just don't see how it's possible. But even if they are able to increase their production significantly, whether or not they hit that target, Most of that production increase is coming from new deposits. One of those is the large Budenovskoy 6 and 7. That's a joint venture with Rosatom, the Russians. And the other one is a joint venture with Orano. And as you mentioned, in Niger, Orano's Somer project has been interrupted with this coup. They had to shut the mine down last month because they couldn't get the reagents across the border. So they're not necessarily having problems there because of the coup. Yes, the French have essentially been kicked out of the country, but this is still employing hundreds and hundreds of local people. I think they're going to continue to be able to produce, but I don't know when they'll be able to flip that back on, hopefully sometime next year. Either way, it's problematic for them, right? So they're seeking new joint venture with Kazakhstan. They're looking at some new stuff in Canada. They're trying to establish ISR in Mongolia. That's looking positive, but still probably 6 or 7 years away. So really what I'm trying to say is the new production and the increased production out of Kazakhstan is primarily from these two large new deposits that are joint ventures with the French and the Russians. Kazatomprom's share, more and more of that is going to be sold to China. Russia's share obviously is staying in Russia. What we're hearing is the Russians are short uranium. They've been buyers of uranium. They've been buyers of enrichment. Yeah, that's a little bit of a head scratcher. So they're short uranium. And I don't think that any of their pounds being produced into Kazakhstan are just going to be dumped into the spot market at present prices. They need that material for their reactor export business, which is huge. They have 18 export reactors in various stages of being built currently, right now, around the world. So it's a complex situation, but the main drivers of production increase until we have new large projects online, until we have DASA and Arrow and Phoenix. Those are the big ones, right? And then, of course, the big Namibian projects too. And we're going to hear some final investment decisions from some of these companies based in Namibia in 2024. So perhaps they'll be starting construction in some of these projects in Namibia 2025. First production maybe 2027 or 8. So we're still 5 years away from Namibia as well. So really what we're talking about is Kazakhstan increasing, Uzbeks increasing, and some small stuff in the US and Australia. That's what we have. That's what we have available in new production in the next 5 years. And it's not enough.
So I mean, I don't want to get too technical here for everybody, but what's the deal with Kazatomprom? I mean, why are they not able to, is it just because they're technically more complex deposits? They don't spend enough money. They're choosing to limit the amount of material going into the market. I mean, this is supposed to be, you heard the canard, well, it ended up being a canard several years ago. I'm not going to invest in uranium because the Kazakhs will just flood the market with an unlimited amount of uranium. And so, why are they struggling to increase production or meet their production targets?
Honestly, what I personally think is they're coming up against limits of physical reality, in my personal opinion. So if they could drastically expand their workforce and have an unlimited supply of sulfuric acid, I do believe they're going to be able to increase those production numbers. But I honestly think simply based on the historical contracts that they've signed and the prices that were negotiated at the time over the last, let's say, 5 years that they're delivering into now, they signed, a lot of contracts for current production at significantly lower prices, and they have to take that into account as well. So it's just not easy to flip a switch. They have their own bureaucracies to deal with. Yes, they're certainly simpler and more easy than building a uranium mill and mine in Colorado in the United States or whatever it might be, right? Like it's easier there, certainly, but they do still have bureaucracies to deal with. 55 to 60 million pounds a year of uranium is a lot of uranium. This is a major, major operation. And to expand that by 30% is no small undertaking. So it was much easier for them to expand in the previous couple of decades when they were going from nothing up to 5 and then 10 and then 15 and 20. That was relatively easy to do. And they also were high grading, just like any mineral extraction process will do. You're going to go after the nose first of that deposit. So you have resource depletion. That's something that nobody really discusses. They just think that Kazakhstan has an unending, a bottomless well of uranium, and that's not necessarily true. They obviously went after the best stuff first. So now going forward, they have resource depletion as well. New projects are not necessarily going to be as good and as rich and as high grade as previous projects. That costs more. It's harder to get more uranium out of the ground. So it's a lot of things. It's limitations in sulfuric acid, just with what they're physically able to import, and they're building their own sulfuric acid plant that's supposed to be online, I think 2026. That should help. So they'll probably be able to ramp production a little bit more easily during that period of time. But you also have to just kind of take incentive into account. Since they went partially public, they've been trying to be more responsible operators rather than being 100% state-owned, largely influenced by Russia, and just flooding the global uranium market with cheap uranium, which crushed the industry globally with very few exceptions. And you can get conspiratorial or not about these sorts of things, but Russia's next door neighbor just killed the uranium market for the entire world. Okay, well, that did happen. Whether or not that was intentional, I don't really know. But they had a play on the depreciating tenge as well. So they've got a lot of factors that are sort of coming together. But really, long story short, it's not easy for them to drastically increase production from this level to a level never seen before. Their maximum production year still was 2016. They have yet to breach that level of production in the last 7 years, even though they've been trying to the last couple of years. So we'll have to see how they do. We're highly skeptical. We think they tell the market in the next 60 days that they're going to miss their 2024 production targets, and it's going to call 2025 into question in a major way as well.
And this could have additional upward pressure possibly on the uranium price.
Yeah, well, I'm sure you saw, John, a couple months back when Kazatomprom came out putting out their production projections for 2025, the market reacted negatively. And this, of course, this was after a 20% run in the sector. So then something needed to pop the enthusiasm at that moment. That happened to be it. But the stock sold off on that news. It's like, oh yeah, we're going to hit 30.5 to 31.5 thousand tons in 2025. And the market's like, oh, bull market over. It's like, well, maybe the opposite reaction will happen when they tell the market they're not going to hit it.
Exactly. Shifting gears real quick back to the US. I was interviewed by somebody else on another channel, and we were talking about this, and I went on one of my political rants. The guy allowed me to do it, but I just find it fascinating, like the United States, for example, how schizophrenic we are around this whole thing. I mean, we should be at one time, back in the 70s and early 80s, we were ostensibly the world leaders in this. We had a uranium industry dating back to the 1950s. I've got the history books here. I've read them for it was like go cowboy, bunch of cowboys running around in Utah and stuff in Arizona back in the 50s when the government was just buying all the uranium they could for nuclear weapons. But 20% of the electricity in the United States, I guess you could say, I'm just rounding up, I guess it's around 20%, is generated by nuclear power. And I looked on the DOE's website the other day, or somebody's website, or EIA maybe. I think there was like 40,000 pounds produced in the US or something in the last year or something. And I think the year before it was like zero. I can't remember. It was something, it's ridiculous. I mean, I think we need about what, 50 million pounds a year here just for our needs in the US. And so this is another thing that will kind of lead us into the investment. You have a lot of people. I tell people uranium is not like, rare earth metals. There is a lot of uranium in the ground, but where it's at and what concentration and what's the price to extract it is always going to be the question. And so I thought it interesting, we have this fact that we are talking about legislation that may be voted on in Monday that's going to restrict the importation possibly of Russian uranium or enriched products or whatever. I haven't read the legislation, but the gist of it's that. And yet, what's our plan here? Are we going to, I mean, there was some nascent steps forward during the Trump administration to try to incentivize, I forget what it was called, section, whatever. You remember, it was a few years ago.
Section 232.
Yeah, there was a lot of nonsense around that. But I mean, do we really have the potential here? I know there's a mine here in Texas, South Texas, that just started up again, an ISL mine recently. But what is a realistic or what would be what would be a price that you would need to see to really see an organic regeneration of a U.S. mining industry? Because there's a lot of people out there, there's a lot of juniors that, and I know a lot of these projects from the previous, these are all projects that Union Carbide found in the 50s or these early companies, and they just seem to get recycled through various cycles of the uranium market. Are we ever going to have a legitimate mining industry here? Do we have the resource, and what would be like the price that we would need to see for that to really get cranked up?
Yeah, I think it's possible. The historic large amount of uranium that was produced in the 80s in the United States, 70s and 80s, a big chunk of that came out of New Mexico. And there's a not very positive uranium mining legacy in New Mexico. So it's going to be a difficult slog for the companies that have projects in New Mexico to actually get those into production. I think there's going to be a very complex set of agreements that are going to have to be made, and incentivizing of the local communities to get that social license to make it happen. So what we're really looking at is pretty much Texas, Wyoming, possibly Nebraska with some of Cameco's assets if they end up moving on those, and South Dakota to some extent maybe, and then Utah. That's pretty much where all of the uranium production comes out of the United States. These are lower grade projects. Generally speaking, the dry mines in Utah are pretty low grades. The ISR stuff in Wyoming is probably the best in the country, and it's also a great mining state. So you have multiple companies that are currently producing tiny amount of uranium, like you mentioned, UR Energy and Energy Fuels, and then you have Peninsula, you have Encore, Strathmore, Uranium Energy Corporation, Cameco. I'm sure I'm forgetting a couple of others, but a lot of companies, they are moving towards production right now. So I would say that those prices are kind of there. The prices going up is only going to help from here, but it's more a capital restricted environment, a time frame challenge to bring into construction, and then, like I said, a skilled labor construction. We know some of these companies are already having some challenges with sufficient skilled labor, finding the drillers. Honestly, it's a challenge in the United States. So it's not even necessarily the quote unquote like incentive price. It's all of these other things that are making it difficult to move towards production. With all of that said, yes, the Section 232 petition, I think that was 2018 when that happened during the Trump administration, and they ultimately shot that down. What that was a petition by the uranium mining companies, or a couple of uranium mining companies. I think it was Energy Fuels and UR Energy that co-signed this petition, basically trying to get something passed that would require U.S. utilities to buy 20% of their needs from domestic miners. That was shot down. But what Trump did do is start this nuclear fuels working group, and it started the ball rolling of taking a look at this problem, which, as you said, 20% of the grid in this country and basically zero of the fuel that fuels those reactors. So it's a major, national security problem. It really is. With all of that said, what happened during the Trump administration kind of got the ball rolling. That went into 2020, and obviously 2020 was a total cluster. So I think that there were bigger fish to fry during that election year. With all of that said, getting into the Biden admin, the Department of Energy has been insanely supportive of nuclear. The Inflation Reduction Act, which was absolutely absurdly named and had a bunch of pork in it that we don't need to get into, that's absolutely embarrassing, did have a lot of supportive measures for nuclear. So they have clean energy production and clean energy investment tax credits that essentially has de-risked the entire fleet across the country. We're already seeing, for example, like the Palisades plant that was shut down in Michigan, operated by Holtec or owned by Holtec. They're going to restart that, looking at 2025 for restart of Palisades and to build multiple small Holtec branded 300 megawatt modular reactors at that same site. And the surrounding communities in Michigan are in support of it. Every other nuclear operator in the United States, due to this support primarily in the Inflation Reduction Act, are going to be able to life extend their reactors. And a lot of them are looking at new nuclear. So hugely supportive act that has a really ridiculous name, but it is there. Now, the Department of Energy also was the ones that released earlier this year this liftoff report, where they looked at, I think it was hydrogen renewables and nuclear. And their nuclear power liftoff report, again, went into looking at all of these coal power stations that have been or are slated to be shut down. And 80% of them are essentially eligible based on the surrounding grid size and the design, I suppose, for a small modular reactor to be put in its place, in place of that coal power plant. This is being put out by the government, by the Department of Energy. This is insane. We never would have expected this type of analysis or promotional research. And then, of course, in this liftoff report, they were also looking at doubling or possibly even tripling the domestic nuclear fleet by 2040. And so that's the DOE. Then the reality has to deal with the Nuclear Regulatory Commission, whose job is to make sure that we have a safely operating nuclear power fleet. And they have been notoriously slow and difficult to work with in terms of getting new projects, especially new designs. Anything other than a traditional light water reactor or to some extent a boiling water reactor can take a very, very long time to go through those channels. So we've seen, for example, like NuScale Power, who has a light water reactor, small modular reactor design, and they are changing from a 50 megawatt to a 77 megawatt module. They had to reapply to the NRC to get that larger one approved. It's basically the same, identical design, slightly larger. Obviously, there's some engineering components to that slightly larger. It's going to take 2 years and 20-something million dollars for them to get this new application redone. And that's fast, right? I mean, there's something like 30,000 hours of review that they expected in order to approve that. So it's just a bureaucratic slog to get new nuclear done in the United States. With that said, I actually kind of, for the first time since I've been watching the sector, feel hopeful about the possibility of it happening. So the DOE of the Biden admin is hugely in support of nuclear, which I applaud greatly. The NRC is getting there. We'll have to see if we end up seeing new nuclear in the United States. It's not on anybody's bingo card. I'm not holding my breath for it, but as far as the domestic supply chain for the nuclear fuel cycle, there's also multiple bills going through various stages of legislation right now that are in support of that as well. They've especially been focusing on enrichment because that's our biggest reliance on Russia is via enrichment. We have some conversion already in the United States with ConverDyn's Metropolis. And then uranium mining, there is a federal uranium reserve, strategic reserve, and they already have put out some RFPs and awarded some contracts for deliveries of those from United States companies. I don't know if that's going to be continued on an annual basis, but there is that, and I think there's more in the works for supporting the uranium mining companies. But most of it's been fuel cycle support.
Yeah, and I'm with you on that. I mean, I think, I've even seen industry, like for example, people don't realize this, but in chemicals and refining and things like that, there's a lot of those are chemical processes that are usually have a big heating component of steam or whatever. And I know, for example, companies like Dow are very interested in looking at SMRs as a way to kind of get rid of the combined cycle gas turbine that they have in those big, huge plants and have that steam and electrical be generated by an SMR. But, I did see the NuScale news. So I'm glad you mentioned that. That stock, I think, got cratered pretty good on that. But I think what we really need to do here, just as a small commentary, there's so much potential there, and kind of somebody showing some leadership to try to bring all let's pick two designs, let's streamline things, let's have the government backstop this stuff, they can incentivize it some further. But I'm not seeing that concerted effort. What I see is, let's, like you said, DOE doing this, and then Biden going out to Arizona and signing that you can't mine in this one area anymore. That's why I say it's kind of schizophrenic. I don't know the details of each and everything that happened, but I would like to see a more concerted effort. Hopefully that will happen. Let's shift to the investment implications, because that's what everybody really cares about, I guess. Kind of talked a lot about the supply and demand. I think we're both in agreement that we're in a bull market. Anybody that doesn't think we're in a bull market isn't paying attention. We can talk about how long it's going to be or how far it's going to go. But what I want to talk about is one of the things I've done recently in my newsletter, and I am a generalist, is as is typical in a sector, especially in the resource sector that begins to become popular, you start seeing new companies come, into existence, projects that I've never even heard of, or some that are recycled from previous, like I said before, cycles. But um, what i- what I've done now is I've said, I was able to get into a lot of these smaller companies when they were very, very cheap. I said in my last newsletter, I wrote it up as like, they were like long-term call options at that point. You're not going to do discounted cash flow analysis of Paladin when it was selling for 8 cents a share. You just buy it, and it's a long-term call option. That's how I kind of looked at it. Now, as this thing has matured, this bull market, and prices have went up, and these market caps in some cases are in the hundreds of millions of dollars, I think it requires people to be paying attention a lot more and being a lot more selective. And I've always gone back, you mentioned it when it just came to talking about craft people and stuff like that in these mines, but I've always said this, and I was reminded of this by another old timer person that I was talking to offline. You have to ask yourself how many competent uranium teams are actually exist in the world. So just because you have a uranium company and you have a property and you have a booth at a Vancouver show, that doesn't mean it's necessarily, there's a difference between investing and speculating. And kind of where I'm going with this is, you're in this every day. You probably, if I made you could probably name, 95% of the companies that are listed, uranium companies. But what do you do? I mean, would you agree we're past the shotgun blast stage where you can just buy, throw five darts and pick five names, and it'll go up, and you have to be more selective? And then what's your selection process? What do you do to try to figure out where to put capital?
Sure. Honestly, I think most people that don't want to either buy access to research or do research themselves are better off just buying an ETF. For most people, I agree. The shotgun approach. If you're going to take that approach, you might as well just buy the ETF. If you want a little bit more leverage, you can buy the Sprott Junior Miners ETF, which excludes a couple of the large caps. Um, our process really is trying to find the companies that, if they aren't currently, we believe that they will be actually cash flowing companies during this bull market. We want to own real companies, and there's a lot of companies out there, and no real fault really. I'm not trying to trash these companies necessarily, but most companies in the space have no intention whatsoever of ever producing anything. What they want to do is they want to own a project or a property that they believe will become increasingly valuable as this bull market matures, and probably get taken out. Or they'll make themselves wealthy with stock options within this particular company. And as the price of uranium goes up and the valuation of the company goes up, then they'll have a good run at it. And that's probably the goal. I think there's 130, 140 something companies right now that have something to do with uranium. And I would probably guess that 75% of them have no intention of producing anything ever. And this is just the mining resource stock world. That's
Hmm.
just how it is. And it's the same goes for the gold and silver juniors. It's no different really. But some of them are land grabs, like trying to just roll up as many other small companies and projects as they can, and just say, we have this many pounds in the ground. That has worked. I mean, we saw a couple of companies, like we saw the energy metals in the previous market. They never produced anything, but they accumulated a bunch of projects that the Russians found valuable. The Russians the Uranium One came in and bought it for what is it, 2.3 billion or something like that in 2007.
Yep.
And they went from a market cap of less than $1 million to 2.3 billion in 3 or 4 years. Pretty phenomenal. But we haven't quite seen those animal spirits yet in this market. We haven't seen that yet. Even though we've seen the number of companies expand quite a bit, we really haven't seen the real fireworks happen yet in this market. I think that we will. Usually that happens in the last 2 or 3 innings of a bull market, and we're definitely not there yet. So, and like I mentioned earlier, I think this could last as long as it has to until we have supply actually stem the price. That could be years away. It really could be years away. Will we see a spike between now and then? Maybe. It depends on a lot of factors, primarily if capital flows into the physical vehicles and they come after the spot market. But really what it comes down to from an investment standpoint is It was trying to create some alpha by choosing companies that are going to outperform the benchmarks. That's really what it's all about. So we have a pretty good track record of that, especially since inception. We started this in August of 2019. We're up just under 400% for that period of time. And I think URA is up about 150%, 160%, maybe a little bit more. Maybe I don't have it right in front of me, but we've outperformed the benchmark by close to 3x, I think, in that period of time. And part of the reason, I think, really what it comes to, our biggest winners, is sort of this X factor. It's not really something you can teach on how to determine. You can find in their financials. It's just, what will the company potentially do that they are not even talking about right now? It's not in their corporate presentation. And it really comes down to the inquisitiveness and the commitment and the creativity of management. And so if a manager, so for example, there's two companies I've been following since I've been interested in this market, since 2017. And these two companies had at the time similar projects, okay, similar jurisdictions, similar size, and both of them, I like the management of both companies. Now, one of these companies has a very honest, very conservative CEO who has a lot of skin in the game. And over the last 5 years, he's done almost nothing. So there's been very, very little promotion, very little exploration to prove out resources, has not moved towards the last and final couple of licenses he'll need to have in order to produce, just basically doing nothing. And this other company has made multiple acquisitions. They've grown the company incredibly. And the performance of these two companies, and they were similar market caps when I started watching them. One of them went from about, let's say less than $20 million market cap to about 150, which is great. And the other one went from less than $20 million market cap to 600. And that, all of that has to do with the moving and shaking that management did during that period of time. All things being equal, they were very similar companies, similar share counts, similar land packages. But it's really the company's ability and the management's ability to create value during a bull market. And that can come in a lot of different ways, but that belief in management at the time when the company was still very small is really what made us a lot of money on this particular company that I'm discussing, that I'm not going to name. And that can happen at any point in time. Even right now, there's companies right now, like an exploration company that I'm looking at, that I really like the team. They have a lot of historical successes. I don't know if they're going to hit anything, but if I'm going to bet on an explorer, I'm going to bet on the team more than anything. And especially with an exploration company. Now, we don't really like to bet on exploration companies just because it's such a gamble. But if you do buy an explorer, before they hit something big or just after they hit something big, you can have enormous returns. And that's something we're always looking at. With all of that said, management, share structure, jurisdiction, and then probably that X factor. If you think that this company is going to do something special that the market is underestimating during the bull market, then oftentimes that can return much greater than the benchmarks.
Yeah, I think it's important. You mentioned some things at the end. Is exactly. I mean, management's always going to be, to my mind, have these people. I mean, that's kind of going to be in any type of industry or any kind of business. If I'm going to give capital to somebody or go along for a ride with somebody, it's going to be somebody that has done this before and has demonstrable success. And that doesn't necessarily mean the CEO, but who does he have under him? Have these people been on projects? You can see, if the guy's a promoter or he's a finance guy, well, that's great, but we can't have everybody in the management team, having never explored and found the uranium deposit before. And there's a difference, like you said, around ISL and hard rock mine. I'm not going to get into all that, but there's different skill sets that people need to have. And I think it's important. And I think, that's what I tell people. I've even mentioned it, and I get no remuneration or any benefit from Justin to say this, but I always point people, say, if you really want to put serious capital in this, into these junior companies, because to your point, the whole junior sector, resource sector is like this. It's not, you have to be very, very, you're speculating in many cases. And so, you have the name of your product is uranium inside of you. So you're not looking at lithium mines and gold mines and cobalt mines. You're focusing on the uranium sector. So if somebody was interested in that, I think that's where I would focus and try, unless you're going to sit around and, I mean, this is your full-time job, you and
Right.
you folks over there. So other folks that are just general type people that follow me, I mean, I'm not able or inclined to sit there and try to figure these things out. And that also means calling up management teams. That means getting on planes and going to conferences occasionally. I'm sure all that goes into it. So that's what I would recommend. I say the same thing. I'm to the stage now where I'm just, I mean, even if you just bought the physical trust this year, you're up pretty good. I mean, the price of physical uranium's up about 60% this year. So it just depends what you want to try to do. But what we get is a lot of folks that look at previous cycles and they have visions of sugar plums and they say, well, what's the company I can put $1,000 on? And, they hear the Rick Rule story about Paladin, uh, so, that's not the typical outcome. Let's just put it that way. So
Right.
anyway, that's kind of how I perceive it. So, I mean, just getting to the end here, um, what I would say is my view is, and I just want to get your input on this critique, is because of all the things we talked about how difficult mining is, the situation we're in with supply and demand now that we talked about during this interview. I just have this sense that this bull market is going to be longer in length, and probably I'm not one of these people that the probability isn't zero that we have a spike. It could happen. It could be something like the musical chairs type event or something like this. Somebody actually, it would be big news if somebody had to come out and say, look, we have to shut our reactor. We have to put this thing in cold iron or in standby for a period of a year because we didn't plan this thing out. That would really bring a lot of focus. You could, some catalyst for that. I think we're also, like you said earlier, we're probably going to see an M&A cycle pick up closer to the end. I will say that during the last bull market at the peak, there were around 500 juniors running around with uranium in their name. So these are things that people can look for to know, because I always get asked that question, well, where are we at in the bull market? I mean, obviously predicting the future predicting unknowns is difficult, but I still have to say this, I've made life-changing wealth already just because, in this market, I still think there's more to go in this bull market. But I'm not one of these people who says, well, yeah, uranium's going to go to $500 a pound. I don't know what it will do, but I do think this bull market will be it'll be longer and more drawn out. And I think stair stepping its way up just over time until, economics works. Like I said before, uranium's not like scarce in the earth. It's just a matter of the price getting sufficiently high enough to draw enough capital in to solve the problem. And with all those other problems that we had in this long linear equation of, all these potential problems, how long does that take? And what price does that happen at? So I think there's a lot of runway left here. And one thing I want to get, just in closing, get however you want to add on to that or criticize it or give your view. But the other thing is there will be downturns. We just, I think it was like 2 summers ago, peaked, and then we went through a consolidation that lasted about a year or so, and everybody disappeared. I actually saw people throwing brickbats at you on Twitter. He just repeats himself. Well, nothing changed fundamentally, except for the
Right.
fact that a lot of tourists came in, drove the price up, and then you had to consolidate that stage one or phase one move. And, in the context of a longer secular bear market, you have cyclical pullbacks. So comment on that, because I don't think people get that. They just think things just keep going up every day. And, why did this go down? It's like, if you buy at a fundamentals and what the price is are two different things sometimes, in a market.
Yeah, that's very well said. It's a very volatile investment. and it does shake a lot of people out. And I can tell you from this point on, we believe the price is going to go far higher than anybody is really expecting, and the utilities will pay for it. They just will. They have to. If you need uranium, you're going to pay what it costs, period, because you can't not have fuel for your reactor. That's not an option. And this is why inventories exist as well, right? There's always a little bit of a buffer. So even if we spike way high, and a utility might not want to come in and buy that price for whatever reason, typically they'll have a little bit of inventory and they can draw on that. And that's one of the reasons for having that inventory. So I guess what I'm saying is, utilities, generally speaking, though, they cannot not fuel their reactor, and they will pay whatever that price is. So when we see big moves in conversion and enrichment, that actually does support the price of uranium, but uranium can spike in on its own without conversion and enrichment necessarily going along with it. That's important to understand, because as far as a utility fuel buyer is concerned, when they have to buy the cake in a can, they have to buy the uranium, the U3O8, they have to buy conversion, they have to buy enrichment, they have to buy deconversion, fuel fabrication. All of those things they have to secure to get their fuel. Just because uranium, let's say, goes from 80 bucks a pound to 150, if conversion and enrichment stay the same, that doesn't really move the needle that much for them. And that's very, it's hard for investors to wrap their head around that, because we have such a buy low, sell high mentality that doesn't make sense to us. We say, why didn't the utilities like super bolster their inventory in 2018 when there was 150 million pounds of above ground mobile inventory sold, for sale at 30 bucks? Like, why didn't they do that? Well, they had no incentive to do that. Their incentive only is to buy uranium when they're supposed to buy uranium, and that's it. And that's what's going to happen. So it's a volatile sector, despite the fact that things look incredibly constructive for the commodity. The equities don't always follow that in lockstep. And a lot of people get shaken out sometimes when they see the commodity rising and the stocks just not really keeping up with that. But then you'll go through these periods of time like December 2020, January 2021, where the stocks doubled and tripled and the spot price didn't even move. And so there's going to be a lot of situations like that that don't really make sense to you as an investor. And it's important to understand the physical market as much as you possibly can in order to not get shaken out. So throughout these ups and downs, especially over this, generally corrective last 2 years, year and a half, the fundamental story has only gotten better. And that's what's given us confidence to buy and add on the lows and to hang in through the volatility, is we understand the physical market. And here going forward, like I said, John, I just don't know what the relief valve is going to be. Something at some price is going to break, and there's going to be some supply that comes in. There's not a lot of inventories that are held outside of China. So will China be selling inventories into the market? That's a big question. So far, they've done the exact opposite as the price has risen. So we've gone, in the past 12 months, we've gone from $48 a pound to $81 a pound, during which period of time we've seen substantially less inventories being sold into the market. In fact, the folks that you would think would be selling inventories into the market are actually buying uranium. The Chinese are buying uranium. The Russians are buying uranium. So it's the squeeze is kind of on, and I think we're in the early stages of that. And where are we in this investment cycle? To kind of go back to your original question a few minutes ago, is like, I don't really know where we're at in the investment cycle. We're clearly not in inning one when everybody hates nuclear and uranium and the companies are trading for pennies on the dollar. That's not happening anymore. We're in a trend now. We're in the bullish trend. And I've quoted you for like the past 3 months. I do this weekly watch list where I go over all of our positions and charts of that. And then I have a multi-paragraph little blurb about the previous week and what I expect for the week going forward. For the past few months, I got, like my friend John Paulamy says, just keep it simple. We're in a bull market. And there's just the chart of the commodity. It's like, yeah, it's very clearly a bull market. So we are in that trend right now. It's not really a contrarian investment. What is contrarian right now is to fade the general bear thesis. And the general bear thesis is we hit some arbitrary cost per pound and all of a sudden the taps open. that isn't going to happen, and it hasn't happened. And we're already at that arbitrary cost that the folks have been saying that thought that you would see pounds come flooding in, and the opposite has happened. So that's what's contrarian about this, is to fade that and to understand enough about the production side and enough about the demand side and the state of the physical market currently and where we expect it to go, to still hang on to positions and even add on weakness. That's what's contrarian. How far this can go, I mean, we're 5 years from supply maybe being able to balance this market. What happens between now and then is anyone's guess, but I believe we're going to go way, way higher.
Well said. Again, that's what I try to remind folks. Having the thesis and knowing the fundamentals, and if that doesn't change because the market's fickle or emotional, if we have, in the short term, markets run on liquidity and sentiment, and if we have a liquidity event and people are selling stocks, I can guarantee if the S&P is down 30% next year, or if we whatever, it's going to be an anchor around a lot of companies. I mean, in a stock market, stocks go down, so that doesn't mean that the fundamentals aren't still getting more and more bullish. I look at those as buying opportunities, because that's what you do in a bull market, and this is a secular bear market or bull market. This is a multi-year bull market. So you can look at, that's why I challenge people to do. I try to educate people. It's like, go look at bull markets, any bull market. I don't care what it is. The bond market, bull market we had over the last 40 years in the US, stock market, general S&P, you will see, things move from the lower left to the upper right, punctuated with various, and you can do that. There's so many charting tools. I've done that many times in the former bull market, showing various names that still exist, that there were 3, 4, 5, 6 pullbacks in a stock that went up 1,000% of 50% or more on that trip to 1,000%. So how many people got shook out? Because were you operating on emotion, or were you operating on we're still in a bull market or whatever? The fundamentals are directing me that we're in a bull market. This is an opportunity to buy, and that's hard to do. So that's a psychology discussion. But anyway, that kind of brings us to the end here. I've had you for over an hour. That's generous with your time. Appreciate it. Is there anything that we missed? I guess one thing you kind of touched on it a little bit. One last thing, a couple minutes here. The bear thesis. You touched on one, which you kind of dispatched. What you always want to ask this. I tell people, with taking off the table another Fukushima obviously would not be good, but anything else on the bear side where you challenge your thinking and say, okay, let me invert this and think to myself, what could wreck this thing going forward? And I think you addressed one of them around that idea that all this supply was going to come in to the market. That's not going to happen. If we had a Fukushima, that could cause damage to it. Ultimately, it would just be another period of 5 or 6 years, and you'd be right back there, because we have no choice as a civilization, I would argue. But what else that people don't consider that could come in and possibly wreck this?
It's a tricky question. Honestly, I have yet to hear a really well-researched bear thesis for uranium and nuclear. I think the trend is clear both for nuclear and for uranium right now, and we're just in the middle of that trend. So what is the bear thesis? I suppose the bear thesis, because it's very hard to say that mined supply coming online in the short term is going to stem the price rise. I don't think that is going to happen. In fact, I pretty much know that's not going to happen from primary mine supply. So I suppose the bear thesis, besides, like you said, another nuclear accident, which knock on wood doesn't happen, certainly I don't think another nuclear accident actually would even suppress demand in the same way that the Fukushima accident did. I just think that the trend is too strong right now around national security, energy security, clean energy. All of these things are so supportive of nuclear. But who knows? That's always this exogenous event possibility that nobody can model out or predict. But putting that off the table, I suppose the biggest bear thesis would be a large holder of inventory selling into the market, right? So that would be, I mean, who has a lot of inventory to sell in the market? China. That's pretty much it. But then you have to then look at, well, the evidence. The evidence is we've seen the price quadruple in the last 4 years, and less supply is being sold into the market, not more. So that kind of goes out the window, at least at these prices. Considering China's build out, so there were 6 construction starts globally this year. China was 5 of those. It's still not on pace with their goals. Their goals are to hit 150 gigawatts by 2035, and they have 58 gigawatts right now, 57, something like that. So they need to start about like 8 construction starts a year, and they're not on pace with that, but still 5 in a single year is a lot. I think they've got 26 under construction currently right now. China does not have a lot of domestic uranium in the ground. So they famously have this 1/3, 1/3, 1/3 strategy, where their goal has been and continues to be to produce 1/3 of their needs of uranium, to contract 1/3 of their needs, and to produce outside of China the other third by acquisition. So they bought Husab from Extract back. I can't remember what year. They bought that, I think, 2 point something billion. They spent another 3 billion. They spent over 5 to 5.5 billion in CapEx acquiring that project and building it out. Now it's rocking. Now they're producing 12, 13, 14 million pounds a year in Husab in Namibia. But that 1/3, 1/3, 1/3 strategy is so pie in the sky because they cannot produce 1/3 of their needs in country, which is why we've seen 2 different Chinese utilities in the last 12 months sign monstrous contracts with Kazatomprom. Contracts that are so large that the cumulative pounds under contract for that particular entity with Kazatomprom was so big that it was more than 50% of the book value of Kazatomprom, and it had to go to a special shareholder vote. 2 of those in the last 12 months. Plus, they have JVs with Kazatomprom as well. I honestly think not only are we going to not see China flooding the market with inventory sales, we're going to see them buying more uranium from Kazakhstan, probably looking at other projects, probably Africa. So their build out plans are not. The Chinese don't think about profiting from buying and selling uranium. They are thinking about building and growing in the country of China, and they are expanding enormously with their energy infrastructure, not just nuclear, but across the board, solar, coal, just all across the board, they're growing. And they need, if they are going to hit, and I think they're serious about their goals of 150 gigawatts. So just to give you an example, 150 gigawatts and let's just assume a low tails assay. They are building out their own enrichment, right? So let's just say 0.2 tails, 150 gigawatts is, let's see, 1 gigawatt is 450,000 pounds. So what is that? 150 is like, what is that? 70 to 75 million pounds per year, 10 years from now. So maybe they're sitting on 500 to 600 million pounds of inventory. So what is that? 6 years of inventory? That's not enough for China, especially that they don't have the in-ground resources. So we don't expect them to sell inventory in the market unless and until there's an incentive, A, to stem the price, which I don't really see what that instance would be at this point, or B, that they can replace and replenish those inventories abundantly and cheaply at the time that they could sell inventory into the market at $100 whatever a pound. But that remains to be seen. So it's hard to call that a thesis because it's so theoretical. With all of that said, at some point we're going to reach a price that's high enough, and it's going to stay high enough for a long enough period of time that uranium will find its way into the market. Between now and what price that is, I have no idea. Eventually, like if we had sustained prices above $200 a pound, we're going to see uranium coming from phosphates, and we're going to see uranium coming from seawater. I mean, but it's got to stay there for 5 years, right? So that technology can be developed. But I hope that it does. And I would like to enjoy this wealth creation opportunity that's generational for the next 3 to 5 years. And then I hope we have a lot of new technology come on board in the 2030s that will enable the growth of nuclear, like we're talking about, for the sake of humanity. That's what my hope. If I had my druthers, that's what I'm hoping for. So yeah, there's technologies out there. It's just, it takes time and it takes higher prices to make them happen. So eventually, hopefully, that will be the case. Mined supply for a tripling of the existing nuclear power capacity globally right now would be challenging, right? And you're talking about 500 million pounds a year coming out of the ground. That's a big ask. So I don't know if that'll ever happen. But between now and the next few years, we don't have a supply relief valve coming from the ground, and that's really what we're looking at here, and it looks very constructive going forward, in my opinion.
All right. Perfect way to end on that. Why don't you, for folks that I'm sure everybody knows you, but if they don't and they're interested in your product or find out what you're doing at Uranium Insider, again, I don't subscribe. But I know Justin for many years, and I've heard nothing but good things about the product just because I'm a generalist. I just buy the ETF at this point and the Sprott Trust. But I know there's a lot of good. I mean, 400% is pretty good against a 150 on on URA. So that tells you what you need to know. If people are interested in that and following you, I know you put out a lot of other content too. I get emails and videos that you guys do. Where can they follow you? What can they do? What should they, how should they follow you?
Sure. Well, I'm on Twitter relatively frequently at Uranium Insider, and then we can be found at uraniuminsider.com is the website for the newsletter. And we put out a monthly newsletter. It's usually 40 plus pages, pretty exhaustive, a heavy focus on macro. We spend most of our time, honestly, researching into the physical market. We want to know what's going on there more than anything. And then secondarily would be into the companies, but we want to know primarily first and foremost what's going on in the physical market, who's selling uranium, who's buying uranium, what is it looking like, where's the price headed, and that information is what we distill down and give to our members. Then I do daily updates either through an updated data sheet, or I do a daily market update video. I do about 3 of those a week. We do monthly members only webinars. This month, we're actually having 2 webinars. We're having a special guest on next week to look at, do some chart work on the uranium space. And then actionable bulletins with, buy and sell orders that we do. So, and market moving macro information as well. If it's urgent, we'll get an email out and I'll produce a video on it. It's all that we do is the uranium sector. So I've got a partner who's a retired hedge fund guy with 40 years in the metals and mining space. And then we have a small team supporting us as well. So it's been fun so far. I honestly think we've got years ahead of us. And I agree with you. I think it could be a longer bull market than most people are expecting. So looking forward to this going in the next few years for sure.
All right. Good deal. Again, appreciate you coming on, and we probably need to get together sooner than a year and a half or a year or whatever. So
Yeah,
we'll try to do that going forward.
sounds
Again,
good.
thanks for coming on. Appreciate it.
My pleasure. Thanks for having me, John.